Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick and Katie Greifeld counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. We're joined right now by Tim Stenovec and the pride of New Jersey, Carol Massar. We welcome our audiences across Bloomberg Television, Radio, YouTube, and Quick Take. Is that what they give you in Jersey?
They do. All right, so I don't even know. I kind of want to fast forward to the Fed meeting next week. I just kind of want to know what's the Fed
Katie
thinking.
just was looking ahead next week. You guys are such a long-term.
You know why? They're both from New Jersey. That's why.
Exactly. Oh. We are both the pride of New Jersey.
That's all we talk about in New Jersey. It's the Federal Reserve.
That does happen, right? No, but I really kind of want to know, all right, what's the new data? What's the new projections? What's the new dot plot? I just want to have an idea. We all thought we're going to see a little bit of a more dovish Fed after those comments from Jay Powell. I just, Tim, want to know at this point.
Don't we all? I mean, we just spoke to Dave Harden, and he wants to know what the Fed is going to do as well. He's the chief investment officer at Summit Global Investments. They've got about $2 billion in assets under management. He brought us back to the 1970s, though, saying that, we'd see huge rallies, and then we'd see, those lows being retested, and you would get back to those lows very quickly. He thinks that's going to happen again in this bear market. He just doesn't know what the catalyst is going to be.
You know what comes before Wednesday is Tuesday, and on Tuesday is the CPI
Katie,
report.
I was so confused. I wasn't sure, but thank you for that.
That's the timeline. So we do get CPI on Tuesday, which is obviously going to be another biggie. 7.3%, that's the annualized expectation.
All right, well, there's your calendar update here for the day as far as the update on the markets. We're getting the closing bells here in New York, and I'm not sure how much you can read into the price action in the equity market. A lot of it following the cues from the bond market, but an S&P 500 is going to close lower by roughly about 0.2%. The number's still trying to settle here, but that's going to be about an 8-point loss on the S&P. The NASDAQ down about 56 points or 0.5%. And the Dow Jones Industrial Average looks like it's going to end the day basically unchanged, kind of poking back into the green as these numbers settle. Of course, the Dow has been one of the relative outperformers over the last couple of months versus the S&P. Russell 2000, Carol, down 0.3%.
Yeah, and remain a little bit of a hair of outperformance, if you will, when it comes to some of those big bank stocks. We've been talking about it, of course, at that Goldman Sachs conference where everybody just seemed to be so downbeat when it comes to the outlook. So the KBW Bank Index just up a hair, though, Katie, just up about 0.2%, up 1% earlier in the session. But I thought it was interesting in a day where it felt like everything was a lot lower, or at least dragged down for the most part, that we saw a little bit of a gain in those bank stocks.
Well, if you look at the industry groups, I don't really think there's a clear message to be read here. I mean, the S&P 500 down just 0.2%. It's a pretty much an even split if you look across the 24 groups that we do have. At the top, we have consumer durables. Then we have some health stocks up there as well, but really gains of less than 1%, so not that huge. If you look at what's at the bottom, though, you do have autos down pretty meaningfully, 2.7%. A lot of that is coming just from Tesla, Carol. I also see some media stocks there as well, but again, a pretty split day.
All right, I'm going to get to the number one and number two gainer in the S&P 500. State Street up more than 8% in today's session, rallying after some positive news in terms of a buyback and outlook for the company. The company coming out and saying it's raising its existing share buyback plan by up to $500 million. That's according to a statement. Now intends to buy back up to a total of $1.5 billion of common stock in the fourth quarter. So again, up 8% on State Street today. Campbell Soup, number two gainer in the S&P 500. This one was up 6%, pretty much closing at its highs of the session, up after reporting earnings. Analysts highlighting an earlier than anticipated outlook boost, a mild decline in volume, and strong sales growth and gross margin results. RBC sees the upbeat report as positive for packaged food companies. Who doesn't love a good can of soup? And then this
That's
one.
That's a 52-week high, by the way, 56.18.
Thank you so much for
actually,
that.
Actually highest since like 2017.
All right, so big move, right? Yeah, in that name. Prometheus Biosciences, man, Charlie Pellet has been talking about all of this on radio. Ticker is RXDX, surging more than 200% at its highs, finishing the day with a gain of 165%. It is a $4 billion market cap company. It's a specialty pharma company. They shared some data on a couple of trials of its investigational therapy for IBS. We're talking about inflammatory bowel diseases, and that apparently the results blew past expectations. So again, big move. It's up about 140% year to date, but about 16% of the float is shorted. Yeah. But nonetheless, that was some outperformance. I thought you were going to talk about this earlier in the session, Romaine.
No, I like to leave you something to do.
165%.
Thank you very much for that.
You're welcome.
Biotech is so fun because you can just see gains like that. It's very black and white, whether the studies and the trials work or they don't.
Yeah, exactly. And it can take a stock, right, that has been in the red, maybe in a big way, into the green, like in just one day.
All right, speaking of in the red, we saw mega cap tech actually weigh on the S&P 500 today. Apple among the worst performers on a points basis, Tesla in there, Alphabet, Microsoft, Broadcom, and more. Apple shares fell pre-market after the supplier Murata Manufacturing said that it expects Apple to reduce iPhone 14 production plans further in the coming months due to weak demand. The president of Murata actually told Bloomberg News in an interview that stock in stores suggests slow demand for this latest iPhone model. We also did see some other news from Apple saying that it's upgrading security protections on its devices, adding the ability to encrypt iCloud data backups. Apple finishing the day down by 1.4%. And then Brown-Forman, the maker of Jack Daniels, Finlandia, vodka, Woodford Reserve, and more, falling the most since March of 2020 after second quarter profit missed expectations. Management came out and said that inflation, supply chain disruptions, and Forex actually drove gross margin decline in the first half of fiscal 23.
And I just want to point out on Carvana, too, because we were talking earlier about this idea of sort of all the debt holders trying to sort of bond together here and what that means for equity holders. You actually saw AMC saw off pretty hard on this as well because they're potentially facing a similar thing, and there's now concerns that you may see what is happening with Carvana also happen with AMC, and of course equity investors could potentially get shut out there. Also Blackstone down for a third straight day. I do want to get over to the yield picture real quick here, guys, because it was actually a big part of the story today. Down 11, 12 basis points pretty much across the entire curve here. And two things struck me here is the massive volatility. So just take the 2-year. You're down 12 basis points on the 2-year today, Wednesday. We were up 12 basis points on Monday. And of course, rinse and repeat. Last Wednesday, it was down 16 basis points. So there's been so much volatility in this space. It's not even about the absolute level of yields anymore. I think it really is that volatility. And that's really, I think, scaring a lot of people away. And then, of course, guys, we go back to economic conditions and what the yield curve is telling us. Deeper inversion on that 2s, 10s at about negative 85.
Well, Romaine, think of all the conversations we've had about Treasury market liquidity in the past week or so. This is what you're hearing.
Well, we've
from
only been
traders.
hosting together for 3 days.
I know, and somehow we've talked about this so much.
But it feels like forever, right, Katie?
It really made an impression on me, sort of the conversations that we've been having. When you see this type of volatility in the world's biggest bond market, this is not normal. If you look at the MOVE index, it's at levels double the 10-year, not 10-decade, 10-year average. This gets back to all the conversations I've been having with sources.
Do you care about GameStop at all?
Not too much, but a little bit. Why?
Well, their results are out.
Tell me.
Would you want to know?
I'd
you
love
ready
to
for
know.
it?
I'm ready.
3Q net sales, $1.2 billion. Street was looking for $1.4 billion. That was the estimate here. So looking like a miss on there. If you're looking for profitability, I haven't actually dug into the release, but I'm just going to take a wild guess and say not quite there.
Their NFT marketplace, wasn't that one of the big pushes?
That was one of the big pushes. And just real quickly, other earnings too. Rent the Runway.
Yeah, let's
Doing
go.
well. Those shares up about 5% in after-hours trading.
Yeah, let's go there. It is up about almost 6% here in the after hours. We know this one is decimated, though, down about 83% so far here in 2022, but raising its annual adjusted EBITDA margin outlook. Third quarter active subscribers, 134,240. Third quarter revenue, $77.4 million. That's above the estimate of 73.2. Sees fourth quarter revenue. Looks like they're raising that 72 to 74 million. The estimate is 71.9 million. But again, this is one that has been decimated. But so I feel like there's such a negative tone on that. I didn't even look at the short
But some of those numbers, I mean, just on the surface, they look pretty good. And I think it's interesting, too, because we had the CEO of Signet on a little bit earlier, the big jewelry, Zales and all that. And she was actually talking about the volume that they're moving, and more importantly, the idea that high-end customers are actually splurging on higher-end jewelry.
Luxury.
Right, or affordable luxury.
But then it goes back to what we were talking about yesterday with this recovery or who this downshift hurts more, Romaine, right? The higher spenders, right, who are in a better position to weather inflation and have more disposable income right now versus those folks who, you know, at least at one point during the pandemic, it seemed like the gap between the wealthiest in the country and the people who didn't have as much was actually getting smaller.
Yeah. I mean, and, you know, look, that's going to be the story. And I don't mean to sound insensitive, but is there sort of an argument to be made that the higher end consumers will be enough to sort of keep the economy from completely going off the cliff.
Did you see Bloomberg Economics,
Yes,
Anna Wong, some great research, and she said U.S. households have enough of a cash buffer, extra savings built up over the course of the pandemic. She talked about Social Security recipients, blah, blah, blah. I mean, we're talking about everybody, normal Americans, if you will. And she says to sustain consumption during the recession, our base case is for real spending to grow at a quarterly annualized rate of about 0.5% in 2023 with strength concentrated in services. She says there's enough for like 15 months of spending to go on. Like if that is true and things aren't worse, that could prop up the economy next year or help it out.
Absolutely. And since you guys like to look forward here, the flow of funds report is due out on Friday. We actually talked to someone a little earlier saying that might give us more insight into how healthy those balance sheets are.
Serving cake and champagne, so please be sure to come.
What?
for the report. All right.
Oh, okay. I'm going to hold you to
So glad
that.
you listened to me. All right, that's a wrap, guys. Our cross-platform coverage, counting you down to the market close on this Wednesday. We do it on radio, TV, YouTube, and Bloomberg Quick Take. We will see you again with Beyond the Bell, same time, same place, tomorrow.